XRP slides 3% as Bitcoin pullback overshadows record ETF launch. The token hovered near $3 for most of the day before a midnight crash erased support, plunging 2% on a record 261.22 million volume spike. XRP endured a volatile 24-hour session from September 21st at 3 o'clock to September 22nd at 2 o'clock, swinging 3.46% between a $3.014 high and $2.910 low. The sell-off coincided with the debut of the first U.S.-listed XRP ETF, which set records with $37.7 million in opening day volume, but institutional profit-taking overwhelmed the bullish catalyst. First U.S.-listed XRP ETF launched September 21st, generating $37.7 million in day one volume, the largest ETF debut of 2025. Federal Reserve policy easing remains in focus, with markets pricing near certain September rate cuts that typically support digital assets. Analysts warn of structural consolidation despite ETF momentum, with resistance persisting near $3. The XRP fell 3.46% during the 24-hour period, collapsing from $3.01 to $2.91 before closing at $2.92. Midnight crash drove price from $2.973 to $2.910, unleashing $261.22 million in volume, quadruple daily averages. Liquidations totaled $7.93 million during the rout, with 90% hitting long positions. Final 60 minutes saw XRP rebound from $2.92 to $2.94, only to retreat back to $2.92, creating a resistance cluster at $2.93 to $2.94. Trading range, $0.104 span representing 3.46% volatility between $3.014 high and $2.910 low. Resistance established at $2.98 to $3 following high-volume rejection. Support zone formed at $2.91 to $2.92, tested repeatedly after the crash. Consolidation emerged near $2.92 in final hour as XRP failed to hold above $2.93. A volume explosion of 261M confirms institutional selling wave dominating overnight flows. Can XRP reclaim and sustain closes above $3, or does resistance at $2.98 to $3 cap upside? How secondary flows from the new ETF affect liquidity, given record-breaking day one participation. Fed's September rate decision and whether dovish policy sparks renewed crypto inflows. Exchange reserves at 12-month highs, signaling potential supply overhang despite institutional interest.